In this video, I will reveal everything you need to know about how to trade using trend lines. So what you'll learn from this video is first how to actually draw them properly, and second how you can utilize the trend lines to find high probability trade setups. And before we get started, I remind you that in my Telegram channel you can find absolutely free trading signals and strategies with which we can earn thousands of dollars. The link is in the description of this video. Join us! So without further ado, let's get on with the video. First of all, what are trend lines? So trend lines are simply key levels that are formed in a trending market. And the reason we draw them is because usually when the price approaches these key levels, it can offer you multiple high win rate trade opportunities. For example, in a trend line strategy, there are two types of patterns that may form when price approaches a trend line. The first pattern is called the continuation pattern, which is formed when the price bounces back to the direction of a trend right after hitting a trend line. And the second pattern is the breakout pattern, which is formed when the price broke out of a trend line, causing the trend to switch directions. Now remember, just because the price hits the trend line doesn't guarantee that a trend change will occur. You need to use additional price action techniques to confirm your analysis, which I will discuss later in the video. So now I'm going to show you a simple way of drawing trend lines effectively. One of the most common questions that beginners ask when drawing trend lines is, should you draw them hitting the wicks and the candle's close or the candle's body? Well, the answer is you want to draw them where it can get you the most amount of touches as possible. Let me give you an example. In this chart, we spotted a current uptrend as prices made higher highs and higher lows. Now, because this is an uptrend, it means you want to place your trend line below the trend. Then you want to adjust the trend line to get as many touches as possible. Now notice that there are some points that are overlapping the trend line and even some that are not touching the trend line at all, which is perfectly fine because remember, a trend line is supposed to be treated as a general area, just like support and resistance. So let's look at another example. Here we spotted a current downtrend as prices made lower highs and lower lows. And because this is a downtrend, it means you want to place your trend line above the trend. And again, you adjust it to get as many touches as possible. And so it's that simple. So now that you know how to draw trend lines effectively, it's time to go in depth into how you can utilize these trend lines to find high probability trade setups. So first, let's start with the continuation pattern, which is a pattern that occurs when price bounces back to the direction of a trend right after hitting a trend line. Now remember, you cannot immediately take a position just because the price hits a trend line. You need to use other price action techniques to confirm your analysis. And a good technique that you can use to confirm a continuation pattern is by drawing a mini trend line right at the pullback. The next step is to wait for the price to confirm the continuation pattern by waiting for it to break out of the mini trend line. Once the pattern was confirmed, you take a buy position. Let's look at another example. In this chart, we spotted a downtrend, and so we place our trend line above here. Then as we look at the current price, we spotted another possible continuation pattern. So the next step is you want to confirm the continuation pattern by drawing a mini trend line at the pullback, and once the price broke out, you take a sell position, 358. And now I want to switch to Quotex, but don't forget to subscribe to my Telegram channel if you are really interested in trading and binary options. There I share absolutely free signals and trading strategies with which my subscribers were able to earn hundreds of thousands of dollars. Follow the link in the description of this video and join us. So, for today's trading session, I want to select only one indicator, the MACD indicator. And as we can see, a green histogram begins to appear on the indicator for this currency pair. So my first trade will be here. Great! My first profit. As you can see, my decision to open the trade up was the right one. Let's move on to the next currency pair. And we see an uptrend on this currency pair. But if we look at the chart a little earlier, we will see that there is a flat zone here. And if we draw a trend line now, we will see that the candle has touched this line. That's why I want to change my investments and open a trade up here. I'm in profit. The price has increased. As usual, I was right. A pretty good solution. As you can see, my balance is growing step by step. Let's move on to the Australian dollar and Japanese yen currency pair. What do we see here? We were a little late. The price pushed off from the support level and went up. Let's move on to the next currency pair. And here we see that a green histogram begins to appear on the MACD indicator, which means that the price will go up in the near future. I change investments and open a trade up. I'm in profit. You see, I was able to predict that an increase in prices is expected at the moment, and it was the right decision. Let's move on to the next currency pair. Here we see a clear downtrend. Let's delete this currency pair, and let's move on to the United States dollar and Indian rupee. And on this currency pair, we see that the price is at the resistance level. According to the MACD indicator, we see a red histogram, so I change the investment and open a trade down here. A refund? Well, nothing. Sometimes you need to be prepared for losses or returns. At least we didn't lose our money. Let's move on to the next pair. There is a clear downtrend here. I don't see any entry points here. Let's add another currency pair. Let it be United States dollar and Argentine peso. What do we see here? The price begins its correction after a strong bearish movement, and now the price is at the resistance level, so I'm opening a trade down. Great! My first $100 for this trading session. As you can see, my balance is growing step by step, and I want to switch to the Australian dollar and the Japanese yen. Here we see that the price is now at the support level. According to the MACD indicator, we see a green histogram, so I change the investment and open a trade up. I'm in profit again. Excellent result. More than $300 in my balance. I am very glad that I made the right choice. Let's open some more deals today. On this currency pair, we see that the price is at the resistance level. According to the MACD indicator, we see a red histogram, so my trade will be here. I change investments and open a trade down. Absolute profit. As we can see, my decision to open the trade down was the right one. Let's move on to the next currency pair. Here we see an uptrend. Now the price is at the support level, and I think the price may turn around in the next minute. I change investments and open a trade up. Well, yes, we are rich. I have the first $1,000 on my balance for this trading session. Excellent result. Let's move on to the next currency pair. We have already made a profit on this currency pair. The situation has not changed here. It's also a global downtrend. But now the price is at the support level, and this is our chance to open a trade up by $1,000. Great, I have more than $2,000 in my balance, and I think that's enough. If you have any questions, leave them in the comments. Also, don't forget to subscribe to my Telegram channel with absolutely free trading signals and strategies. I wish you a huge profit. Bye-bye.